So let's look at the SPY here. 0 DTEs, massive volume, just showing up right off the gate, chasing right off the gate. 614, 15, 16, we see 195,000. I believe it's probably at 200 right now, given the speed, close to 200 at the 615. All of this is new volume showing up. You look at the put volume, you got 100,000 contracts here for the 614. That's less than almost half the volume that we see in the calls. So overwhelmingly, the calls have a lot of volume right now, but it tapers off above 616. So here, we might hit 616 and then find trouble in the SPY to move higher without buying above the 616 number. Theoretically, if there is more volume showing up here in 17, 18, 19, 20, you could actually squeeze it higher because you have high open interest and high OI change. If the market maker wants to exercise maximum pain, then they have to knock down some of these big contracts right here. So I would say that they probably push it to 611. The best way to do it, to be honest with you, is doing the naked calls here. So CRCL, if you can sell a naked call here, it is a really risky strategy. It's going to require a lot of margin in a name like this. You can go, let's say the high was 300. So if you want to be really safe, you sell the 300 and raise 640, which again, it requires a 22% pop. It requires Circle to go all the way back to the highs, which again, is that a possibility? Maybe. It's a high beta name. It could move in a big way. But again, the odds are in your favor, 80% chance of profit. And you're making $600 from selling this odd right here. Even if Circle moves higher tomorrow, if it's not above 300, you're probably going to capture the entirety of the credit. So to me, this is the silver platter right here. The problem is it requires a lot of margin. So they say 3,000 right here, but it's probably going to be 6,000. So you got to have some margin in your account to be able to do this. But this is what I would probably do right now. Just sell the 300 calls for this week's expiration. And we're already Tuesday today, so got a couple of more days and then we're going to close. So this one here, if you look at the volume, you're probably going to get 650 for it. So they're giving you here 630, 640. So that's pretty good. Anything above 6 is pretty good for me. 300, of course. We don't want to go 6 Okay, 300 even better. 300 will give you about $7. I don't know about you, but to me, it's saying do it. So I will do it before the end of the session today. It's risky, but it's worth it because you have a massive amount of credit here. Got to remember, we netted a credit of about 470 for the credit spread, the call credit spread. So the obligation is about 530. That's the maximum loss you're going to incur, 530. And you knew that before entering the trade. Now, if you're going to do something about it to fix it, it's going to require you raising that cash, that difference, the 530 that you need. In that way, you can plug the loss. But the problem is if you try to be too cute with it, it could backfire really quickly because it's assuming more risk just to fix this trade. So here's what you would do. You would raise anything that gives you the 530. In this case, you're probably going to sell the 525, 335 call spread for July 18. You raise that cash to plug the older trade. But now you have a trade open with a lot of risk if Coinbase continues to go higher, and there is no profit to be made because you already used the credit for an older trade. So that's why it's not really the best strategy unless you're really sure that the stock here is beginning to move down, which is not showing up right now, not in the 5, not so much in the hourly. So here, for example, you try to time a move from overbought to a correction. And maybe you're not going to get it right, but you're going to get it right here. If Coinbase heads back sub 325 today, that would be ideal because that gives us a really good shot that we could go by the end of the week and correct all the way. We need Coinbase to be here at 305-ish. If it goes anywhere, let's say below, that's pretty good, but you don't want to go above. So we'll see what happens here. For me, I'm just going to keep it as it is. I know what the loss is. I'm not going to try to be cute with it because it could backfire in my face. If we talk about defense Defense, I think that it's an opportunity to add, to be honest with you. So defense is not an opportunity to sell, it's an opportunity to add. So because of the truce that we got or the ceasefire, we see pullbacks in the defense contractors. I would suggest that we pick them up. I mean, you saw the defense spending in NATO, 5%. That's a huge, huge increase. Billions and billions of dollars that will go in the pockets of Lockheed and Raytheon and the defense contractors in Europe. So the ticker NATO comes to mind. I own it. I like it. It's popping higher. I suggested it before the meeting and the decision that they made. It doesn't pay dividend. That's the problem. But if you have EUAD, that's another ticker that I added this week. Doing pretty good here. This one gives you a lot of exposure to European defense contractors. Doesn't pay dividend though. But you want to add to defense. Definitely add to defense, especially European defense. And better yet, to be honest with you, if we see the dollar going down, then I look at copper futures, cup and handle, looking beautiful right here. And I think we have a release of energy coming really soon in copper. But you also have to consider FCX, because this is really the leader in copper, and I'd rather be in FCX rather than buying the ETFs. I think you're in a good position here in FCX. I mean, it's one of the top gainers in the S&P today, over 7% worth of gains. So good for you for following that trade. If anything, right now you're gonna do profit taking. This is insane. This is kind of the kind of our side that's way, way insane. Now we gotta remember one thing about the hour side. With it trades like this, it's not saying that it has by definition the reverse. Because a lot of traders do this mistake. They look at overbought, oversold, and they think it has to reverse. Not really, because overbought can get even more overbought. But what it's saying right here is the stock is so strong right now that it gives the advantage for the seller, not the buyer of the stock. Now, if it begins to see the trend in the RSI turning negative, such as negative divergences, or you're losing, you're getting out of overbought territory. Once you see that, we're not seeing that right now because we have higher highs in the RSI. Once we begin to see that, it shifts toward, okay, it's a seller/short advantage versus the buyer. So right now, if you're a shareholder in LEU, or maybe you traded it before, I don't know what the circumstance is, but assuming you're a shareholder, you gotta do something about hedging. You'd sell the 200 calls, you'd buy the 175 puts or the 185 puts as protection, so it'll be like this. You would sell covered calls at the 200, you raise about a really nice amount of cash here, and then you buy the puts. And you'll do it at, let's say, 180. That's what I would do if I was a shareholder here. And it costs you nothing. And you have really good protection strategy. Now, as far as Microsoft, you ask about the spread, we're at 475. So unless we get a drop in today or the next few days, it's really hard to do anything about it. You can be cute here and try to fix it via another credit spread. But like I said, I mean, look at what happened with Coinbase. If we did that strategy yesterday in Coinbase, it's probably going to cost you again. So here in Microsoft, here's what you would do if you want to fix it a little bit. You have to still some sort of a credit spread here. So if we're at 490, you think we're going to dip down again, you do 490 and you buy the 500 and you raise a credit of about $400, which will cover pretty much the majority of your loss of the previous trade. But now you got to be nervous about this because you have this again hold all the way till Friday with a $600 loss on the line, if indeed Microsoft does make it all the way to 500. So there is a way to fix them, all these credit spreads, if you enter it wrong, which is by selling another credit spread to finance the loss. But you got to be really, really sure that this is a top and it's going to work out by the expiration date. If you're confident, do it. It'll fix the loss, but I'd like to see a little bit more. Microsoft is not showing me, I mean, if you look at the hourly chart, not showing me anything meaningful here in a pullback. Maybe this is going to be a bearish engulfing candle at the end of the day. And if it does, okay, now we got something to work with. We can sell like another credit spread and then see if the old credit spread is going to work out or not. How do we use this kind of data in our advantage? Maybe if you're looking for a bullish breakout in the market, or you just want to hedge against your bearish positions, for example. The easiest way to do that is Nvidia, because Nvidia has the cheapest options right now, and it is the better looking chart among all of the big caps. Not to mention, of course, it has support from the 150 calls being bought for this week and the week after. So here's what I did. And this might look crazy, hey, Mav, you're insane, what are you doing here? But I bought the 150 calls, expiration date Friday, expiration date the 3rd, the 11th, and then I sold the 150 calls for the 18th. All in all, the strategy will cost me about $1.70 a piece, or $170 per contract. Today, I announced that I closed the 150 that I bought for the 27th. I closed the 150 that I bought for the 3rd, and I'm keeping the 150 calls that I bought for the 11th and the 150 that I sold for the 18th. All in all, I netted a credit of about $6.15 a piece. So that's a huge profit, giving the entry at $1.70 a piece. And here's what the trade looked like this morning at the time when I began to close the trade. All in all, the structure was valued at $530. Then I got for you SN. This is for Shark Ninja daily chart. To my eye, it looks to me that this is a chart that's about to rally higher. You see the RSI indicator with positive divergence. You see the MACD indicator now beginning to roll and curve its way. The exit bearish momentum and enter new bullish momentum. And you look at the Vortex indicator, the blue line is firming up, the red is receding, indicating that bullish momentum is beginning to creep in. We're above the 50 days moving average right now. I want to take a shot here and bet that Shark Ninja will probably going to revisit 100 in the next few weeks. Another bullish pattern that I see here is an inverse head and shoulder pattern. Five-minute chart, as we see Uber up, let's look at the what's going on with the weekly expiration for Tesla, because that's going to give us a clear picture. If I see more puts, they're probably going to follow them. So they're closing the calls. You see that? They closed the calls yesterday, opened the puts. So right off the gate here, it gives the market maker at the end of the week that, hey, my risk is probably shifting toward the puts, because we have huge numbers here that are opening up, and that's not hedged by the market maker. So right now, I don't see any call risk here. 340 is going to be a really important number, because once you lose 340, you don't have a lot of calls here as support. You have plenty of puts in the volume, in the open interest, in the OI change. So this one could do 340. If we lose that number, I think it will be the permission of, okay, now you may enter Tesla puts. One increment though. Second increment comes right here after we lose 333. So we're going to do 340. It's going to be number one, then two right here. Mav, you have the USB 46 calls for August up 40%. How would you manage these? USB probably going to be more sensitive to bond yields. So right now we're above 45.58, which is an important number because it was the last support here before it broke down. So I do like the trade here. You have it all the way till August, so you have plenty of room to go.
See, that's what you never got, kid. It's not about the money. It's about the game.